Welcome, welcome. It is Tuesday, time for another lesson in personal finance. If you're part of our course at the Bauer College of Business, we're about to get started, going live on Facebook, live on YouTube, and about to launch our Zoom meeting. Boom. Give me a minute, and we'll get everybody logged in. Welcome, welcome. Let's do a sound check. Good morning. We're just getting started. I am going to turn off my phone and my iPad. Bluetooth off. Okay, can you guys hear me? A lot of people are still joining. I'm going to jump into the chat box. Somebody, can you hear me? Testing, testing. 1, 2, 3. Can you hear me? I can't hear anyone. Is anybody talking? Chatting? Can you hear me? Okay. Hi, Alina. Yes, thank you, thank you. Okay, cool. Appreciate it. Good morning, everyone. Go ahead and do your... Alina, if you're talking, you're muted. I see your screen is live, but you don't have to talk. But good morning. Hope you're doing great. Now I see you're unmuted. So if you want to speak... I'm not hearing anyone, so if you're speaking... say something in the chat and I will figure out why I'm not hearing you if you're speaking. If you're not speaking, then that's why I'm not hearing you. So today we're going to talk about insurance, risk management and insurance. So go ahead and post your time, if you will. Looks like I've got... Okay, while we're getting started, before we get started, if you've got any questions, you're welcome to post those. I'm looking at the chat now to see if we have any questions. I don't see any questions, so we'll give everybody just a minute to arrive. It's 10:03 a.m. and so today we're going to talk about insurance, and then we have spring break coming up next week, right? Yep, sure. Go ahead and log in with another account. That looks like Hasnain. Sure, do that, and I will admit you. Looks like I've got some folks waiting to be admitted now. So everybody's currently in the queue is admitted. Let's see. Okay, no questions. Hasnain, it looks like you got logged in. You're good. Ready to roll? Okay. I'm going to take a drink of water, and we'll get started. It'll be 10:05. Okay, welcome everybody. Let's get started. we have spring break coming up next week, so I just want to mention that I will be posting an assignment today after class. It will be due on Tuesday at 10 a.m., but not next Tuesday, not spring break. It'll be due the following Tuesday. So you'll basically have 2 weeks to do the assignment. I hope that helps. For those of you who want to do it, early, the early deadline will be Friday at 3 p.m., not this Friday, but the following Friday. So hope that helps. I know that means if you want to get the extra points for turning it in early, you'll have to do it on Friday of spring break, or do it this Friday before you leave for spring break. That's what I would encourage you to do. So today we're going to talk about insurance, and I want to do 3 things in today's Zoom meeting. One is I want to go over some of the basics of insurance, the basic idea of insurance, and give you kind of a foundation. Insurance is a very big part of your budget. So insurance, the category for insurance in your budget is a pretty significant category, which means you're going to spend a good amount of money on insurance in your lifetime. So my hope, my goal in this section of the course is to give you a good foundation, a good understanding of insurance from the perspective of a consumer, because that's what you are. You're a consumer of insurance. Now, maybe some of you are going to want to go into the insurance industry, the insurance business. That's great. That's not what this lesson in this section is about, is the professional level understanding of insurance. There's so much information related to insurance, and I've got a lot of experience, a lot of letters after my name that mostly relate to the insurance industry, and so I know a lot about insurance, and I tend to tell a lot of stories about insurance. That's how I teach insurance, but it's a little difficult to tell stories looking at this camera. But and we really don't have a lot of time to spend on insurance. So my goal is to help you become a good consumer of insurance, so that what I want to do is help you understand the basics, help you understand how insurance works, so that you can make sure you're spending your money wisely in insurance, because it's a big category of your budget. So there's life insurance, there's health insurance, there's homeowners insurance, there's renters insurance, there's business insurance, there's car insurance. And did I say life insurance? All of them are important parts of managing risk. And when we talk about personal finance, managing risk is a very big element of personal finance. So there are basically 7 elements of personal finance. One is generally considered retirement planning, and that's a big category for most people. It's how do you get enough financial independence so that you don't have to work forever. That's probably the first and most important element of personal finance. Number 2, I think number 2 is risk management. And so if you read one of your assignments this semester is going to be the blueprint for financial success. And in the blueprint, I use the analogy or the metaphor of a blueprint with a foundation, but then I go further and I unpack the 7 elements of personal finance, of a financial plan, the 7 elements of a financial plan and the financial planning process. And so risk management is number 2. And I use the acronym FREE-TIC. I wish I had a picture of the tick. I don't have it in front of me, but you'll see that in your homework assignment when you do the blueprint. But FREE-TIC stands for financial independence, otherwise known as retirement planning. The R is for risk management. The E is for estate planning. That's how you tell your money where it's going to go after you die. The next E is for education planning. And then the T in FREE-TIC is for tax planning. And then the I is for investment management or investment planning. And then the final letter, C, for FREE-TIC is cash flow. So we've gone over lots of those elements in this course so far. We're about to get into investing after we finish insurance. But when we talk about insurance, we're talking about risk management. And so that's one of the things I want to do today, is just give you a good overview, kind of a foundation for understanding insurance, how it works, and how you can learn more and become a proficient consumer of insurance so that you make wise decisions with your money. Because again, insurance is a big component in your budget, so you need to understand insurance and how it works. So that's number one. Number two is your homework assignment for this coming week. Again, you'll have 2 weeks to do it. It's really a very easy assignment. I'm going to review that with you today and show you what I'm looking for. I'll show you an example homework assignment where you will go and get a car insurance quote. And so that will be the second part of what I'm going to do today. And the third thing is apparently a surprise because I forgot what it was. So we're going to go over the homework assignment. We're going to go over the basics of insurance, and I'll think of the third thing in a minute. But first, let's jump in as I'm thinking about the third thing. And you see there's a picture of a car tire and a teddy bear. And that's a picture that, well, I used to be an insurance adjuster for many years. And one of the most challenging things in the world is to handle a claim if you're an adjuster, or to be in an accident where there's a tremendous amount of loss. And so that picture illustrates, well, I don't know what it means to you, but it speaks volumes to me. So it's more than just a car that you're protecting when you buy car insurance. Now, you're protecting the lives and the income of everybody around you in a way. So we're going to go over what's involved in a car insurance policy today. Statistically, and this is important, if you're going to understand how to manage risk and some of the ways to manage risk, you need to understand statistics. So I'm going to talk a little bit about statistics. So in 2016, there were 37,461 people died in car crashes. So I don't know what you think about that number. When you compare that with COVID, it's a tiny number, I guess, but it is what it is. People die in car accidents every year. There were 1.3 million fires reported in the United States, and they caused 3,300 deaths and also 14,000 injuries. So which one of those do you think is a greater risk of death? Obviously, a car crash is a higher statistical likelihood of fatality. So it's one of the reasons we're going to focus on car insurance, because homeowners insurance, while it's very important, and fire would be covered under your homeowner's insurance policy, statistically, I want you to understand how your car insurance works, because statistically, that's the one you're going to use the most, and you need to understand how it works the most. So we're going to talk about car insurance. But what I'm trying to point out here is that statistics are an important part of insurance. It's how insurance rates are calculated. It's how your premium is determined. The likelihood of the loss is what sets the premium or the cost of the loss. And there are all types of perils. And a peril is something like lightning. And that's something that happens pretty regularly. There were 27 lightning fatalities in the United States in 2016. So again, your chances of getting hit by lightning are much, 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 much lower than your chances of getting hit by an uninsured automobile in Houston anyway. So again, that's just statistics, and statistics are an important part of insurance. There were 54 authenticated unprovoked shark attacks across the United States. That doesn't mean that 54 people died. It just means 54 people were attacked by a shark. You gotta love that picture of a shark. Thank you, Google. I hope I didn't break any rules there. I just grabbed it. So what I want you to understand is that some risks are unavoidable And those are the risks that you want to most likely purchase insurance to protect yourself and protect your assets, really, against those things that are unavoidable. Some risks are easily avoidable. So let me just point out a couple of risks that I rode my motorcycle to work today. It's a beautiful day in Houston, Texas, so I rode my Goldwing to work. And my first semester of teaching at the University of Houston, I mentioned that I was driving a Harley at the time, and a student told me that I could. He asked me if I took the express lane, and I said no, I don't like to spend money to drive. And he told me that if you're on a motorcycle, it's free, and I didn't know that. So what's really cool is where I live and where my office is here at the Innovation Center. The express lane starts down around my house. Well, it goes further than that. I live in Friendswood. But I get on the highway, I get right on the express lane, and I go all the way to my exit at U of H, and I get off. And in the morning, I get to take the express lane into work, no traffic. It's much safer. I feel like it's much safer because I'm not, there are no cars on either side of me. And then when I go home, I get to take the express lane. So for me, I think driving my motorcycle, it's cost effective, it's good on gas, I don't have to pay the toll, I don't have to deal with traffic. It's a fantastic deal. On a day like today, I feel so thankful that I get the opportunity. And I didn't know that until a student told me that. So anyway, to avoid the risk, though, of, fatalities on a motorcycle in a motorcycle accident are much higher than in a car, as you can imagine. And so one way to manage the risk in your life is to avoid driving a motorcycle. Now, I'm 58 years old, and when my kids were young, my wife just really did not feel comfortable with me going to work every day driving a motorcycle. So for 20 years, I gave up driving a motorcycle. But when my kids grew up and moved away, my wife and I had a deal. And so the deal was I could get a bike, and now I drive a bike, and I love it. But I understand the risk, and you need to understand the risk too. It's just one of the basic things about risk management is that you have the choice to avoid certain exposures. I mean, think about it. I have 3 kids, a wife, a mortgage, education costs. And so when I was younger, the risk that I put my family at to drive a motorcycle was significantly higher than it is today. So there's still risk, but in terms of my financial future and my family's financial future, driving a motorcycle was a risk that I chose to avoid in order to manage risk. And so it didn't affect my car insurance premium so much, but my life insurance, my life expectancy, and all those things. So it's my example of one way to avoid risk. Another thing you can do is minimize risk. And so another picture I stole from Mr. Google is instead of driving a motorcycle, you could drive a tank. And you might be protected, you might go slower, it might cost you a little more in gas, but just a thought. So that's one way to minimize risk. So again, I minimize risk on my motorcycle simply by taking the express lane because there's no traffic. I'm not fighting traffic, and they're just one lane. So it's one way to minimize risk. So what I want you to start thinking about are ways that you can minimize risk in your own life. And that's an important part of risk management, because the things that you can't manage by reducing risk or avoiding risk, you're going to end up finding yourself in a situation where you're going to have to consider the third option, which is transferring risk. And this guy would love to sell you tons of insurance. So that's my insurance sales guy picture. I did pay money for that picture. I didn't steal it from Google because I needed a really good picture that really told a story. So for those of you who have ever met an insurance salesperson, let me just tell you, the insurance industry attracts salespeople who like to sell insurance. Just a thought there. And it is, it's pretty good business, as you probably know. I was a State Farm agent for many years, and I made a tremendous amount of money selling insurance. It was actually pretty easy to do because insurance is something that people need. And when it comes to your car insurance, it's actually something that the law requires. And if you buy a house, then the bank is going to require you to have homeowners insurance. And so each of those policies pays a commission to a salesperson who's selling the policy. So what I want to do, what I'm hoping I can do, is help you understand that sometimes the sales professional who's trying to sell you insurance, they get paid for only one form of risk management. And it happens to be the most popular form of risk management. It's called transferring risk. You transfer risk to the insurance company by paying them a premium in exchange for the promise that they will pay you if something catastrophic happens. Something like you get in an accident and total your car, lightning hits your house, not very likely, but it could happen. Let's say your pipes freeze and your house floods and you have to replace all the sheetrock in the ceiling and all the flooring throughout the house and the broken pipes. So that would be a sudden and accidental loss to your home, a very expensive asset that you would have to get repaired, and you may not have the money in your checking account to do that. So by transferring that risk to the insurance company in exchange for a promise that they will pay you for a covered peril, something that's covered under the policy, you're transferring that risk, paying a premium, and you're having the protection and the coverage that you need so that you don't suffer a financial loss. And that's the point of insurance, is protecting your assets so that you don't suffer a financial loss. You pay them a premium, you transfer the risk. When you pay the premium, you get a promise, and the promise is that they're going to pay you for the large loss that is covered under the policy. So this week we're going to talk about, or your homework assignment is going to be car insurance, and I'm going to unpack a car insurance policy here in a minute. But I just want you to I want to set the table with some of the basic idea of insurance and transferring the risk. So the insurance guy is there to help us understand that. So in your money study group, you're going to see that you have let me see here. Let me just grab a screenshot. Well, I'm not sure I'm going to get a screenshot. I wanted to look in your money study group. You're going to see, let's see, I think I can get it here. You're going to have a Quizlet this week. Instead of a quiz, like you've been doing quizzes, I think we have a Quizlet. Yes, so you're going to be doing a Quizlet. So there's a link in your course, and there's some reading in here too. So I want you to spend a little time because I can't cover it all here in this week and next week. I want you to read. I've posted some pretty good information to summarize what's involved in a homeowner's policy. And next week, I'll answer questions. In fact, I'll answer questions this week too, but I'm assuming that you probably don't have a ton of questions because you guys generally just don't ask a lot of questions during our Zoom meetings. But I'll answer any questions you have about homeowners insurance, auto insurance, health insurance, life insurance. Probably not. Let's avoid business insurance. If any of you that are business majors and you want to understand how business insurance works, that's a whole kind of different level of content. But this is really just an introduction to insurance this week, and next week we'll finish up with insurance. Not next week, because next week is spring break. But the following week we'll wrap it up. But I just want you to know that if you're interested in learning more and you have questions, this is a great opportunity to get your questions answered. I'm going to try not to overwhelm you with too much information, but I do want you to understand the basics of insurance. And so one of the things I'm going to do right now is just go through a homeowner's policy and point out that there are different sections. There's section 1, and section 1 covers the dwelling, covers other structures, it covers personal property, and it covers loss of use. So loss of use means if your house has a loss, a hurricane, a fire, a flood, if you can't live in it, then your insurance company will pay loss of use. And that means you'll have another place to live, and your insurance policy will pay for that. That's section 1. And then section 2 covers personal liability and medical payments to others. 2 very, very important coverages that are part of your homeowner's package. So when we get into auto in just a minute, when we look at your car insurance, you're going to see that they have the same structure. Section 1 for your car, and section 2, liability. That's coverage for the other person. So your home has the same thing. And it's just helpful to understand that in section 1 of the homeowner's policy, it covers your house, and there are certain coverages you really want to have. And so again, I've posted a pretty good article with pretty good amount of detail. I would encourage you to read it, and plus it is part of your Quizlet quiz. And so I wanted to help you really understand the highlights of a homeowner's policy as well as a car insurance policy. Because again, this week or last week, or the week before actually, you purchased a home. You figured out how much you would spend on your dream house. Well, on the house that you could afford based on your salary if you get the job in your industry that you're hoping to get. So that exercise required you to select and purchase a house and put that into your financial plan. Well, this week, you're going to put the insurance into your financial plan. So I'll show you an example of that in just a minute. I'll show you a student assignment so you can see exactly what I'm looking for. But it's really easy to do. But homeowners insurance and auto insurance will be added to your financial plan this week. So I want you to understand the basic coverages in a homeowner's policy and in an auto policy. And so this article, which is posted in Money Study Group, will help you do that. One thing I'm going to point out real quick, a very important thing, and it's on the quiz, is about replacement cost coverage. So I'd say the most important coverage on a homeowner's policy is the replacement cost coverage. Not all homeowners policies provide replacement cost coverage. Some policies you can shop around and get a much cheaper policy by reducing certain coverages. And one of the coverages that you can reduce or eliminate is what's called replacement cost coverage. And it does kind of what it sounds like it does. It pays for your home to be replaced or repaired using replacement cost instead of actual cash value. So think about that for a minute. What do you think the difference is between actual cash value and replacement cost? I'm going to give you a minute to post in the chat box because I want to make sure that you're out there watching and listening and not on Netflix. So just take a stab at it. What do you think the difference between actual cash value and replacement cost coverage is? It's really kind of a giveaway, as you can tell, because there it is on the screen. Anybody? Can you give me your take? The difference between actual cash value and replacement cost coverage. I'll go for an example. I'm thinking replacement cost would be more. Yeah, so Sydney, I think your answer, replacement cost would be more because it isn't depreciated. And that's true. The question wasn't, though, what does it do to your policy premium? Although that'd be a good thing to ask. Yeah, it's going to cost more to have replacement cost. Yeah, one's the depreciated value. So Olivia says replacement cost doesn't matter the cost, you get it replaced. Yep, that's right. It doesn't matter the cost. Although, let me say this, your insurance company, when you have a loss, let's say you have, since we just went through the freeze and tons of people had frozen pipes and that caused damage, let's say, to the floor, to the sheetrock, to the paint. So if you have replacement cost coverage, they're going to pay to replace that, and they're going to pay the total new cost. But if you had an old house, and you had actual cash value, what they would do is they would depreciate. So let's say that the floor and the sheetrock were 50 years old. They could depreciate, most companies will depreciate 1% per year, 1 to 2% per year. And so especially the floor, because that would be a wearing surface, they could depreciate that up to 2% per year. If it's 50 years old, they could depreciate it all the way to 100%. Now, they wouldn't do that. Most companies that I've worked with don't depreciate anything more than 50%. But still, let's say that your floor, I have a wood floor in my house, 2,500 square feet of wood floor throughout the house. If that floor had to be replaced because the house got flooded, and it's, say, $11 a square foot, do the math, it's a lot of money. So 2,500 square feet, let's say that's a $30,000 floor. If they depreciated it 50%, they're only going to pay $15,000 instead of $30,000. And I could replace the floors, pay a contractor, spend $30,000, and only get paid from my insurance contract $15,000. That's actual cash value. So that's a very different coverage than having full replacement cost. So that's an important thing to understand on a homeowner's policy. It is, it's a big deal. And you just need to know what kind of policy are you getting. So you're smart enough to know the difference between, the difference in price from one company to the next. But what I want to make sure of is that you're smart enough to read the coverages and at least understand the coverage summaries to know what you're getting for your premium. It's not that hard to do, whether you're looking at a homeowner's policy or auto policy. You just have to read the declarations page. So we're going to look at one of those in a minute. So that's homeowners insurance. Oh, also homeowners insurance pays for your stuff. So your personal property is part of your homeowner's policy as well. And so that's another important coverage where you could have replacement cost coverage, but you don't have to. You could get a cheaper policy that has actual cash value. So imagine, again, the pipes froze, water came through the roof, got on your TV, your stereo, your computer system, your MacBook, your iPad, your iPhone, your charging system. Everything got wet and it all got destroyed. And if you have replacement cost coverage, when you replace it, the insurance company will pay the full replacement cost, as opposed to depreciating it because your MacBook was 5 years old. Now they're going to want to buy you, a 5-year-old MacBook instead of the new one. As you can imagine, that would be a bummer. So it's important just to know if you have that coverage. Now, this is another thing that may be on the quiz, and this is just a practical piece of information. When you have a claim in your homeowner's policy or your renter's policy, homeowners and renters insurance are identical except for one thing. And I'll tell you what that one thing is right now. Let me ask, does anybody know the difference between a renter's insurance policy and a homeowner's policy? What do you think the one big difference is between a renter's policy and a homeowner's insurance policy? One big difference. Think about it. It's in the name too. Renters, homeowners. Anybody? I'm going to give you a minute. Going once. Going twice. what's the difference? What do you think the difference is between a renter's policy and a homeowner's policy? Renters, your personal property is only, yeah, Olivia, that's exactly right. Charlotte, you said renters have certain amount of X years. Not sure what that means. Not the actual property. Yeah, Olivia, that's right. So the house is the difference. If you own the house, your homeowner's insurance policy is going to provide coverage for the house. A fire burns the house down. If you're a renter, who's going to pay for the house? Not you, because you don't own the house. You own your stuff. So obviously a homeowner's policy is a lot more expensive than a renter's policy. But other than that, they're identical. So remember I told you there's Section 1 and Section 2? Well, Section 2 is identical in a renter's policy. And it's a good reason for you to have insurance, even if you're renting, because then you'll have liability protection and medical payments to others protection. And those two coverages are incredibly important. So that's the answer. The big difference between a renter's policy and a homeowner's policy is the house. You have coverage for the house if you have a homeowner's policy, and not so if you're a renter. Okay, moving along. So another thing we need to understand about insurance is what's called exclusions. Exclusions. Now, think about exclusion, the word exclusion. What do you think it means? It means it's excluded, it's not covered. So there's always a list of exclusions in every policy. So every insurance policy has exclusions. There's a list of exclusions. I think there'll be a couple of them on your quiz, so you'll want to understand what exclusions are. So I'm going to leave the homeowner's policy there for a second. I'd love to tell you some stories about medical payments. I've got some, I think, interesting stories about all these coverages, but we're just not going to have the time for me to tell stories. Okay, so I got Olivia says, this might be a long shot, but do you know how are the premiums based? Like what helps determine the actual rate? I do know. As a State Farm agent, I had to do a lot of work around that. So here's what we're talking about: a homeowner's policy. So one of the things that will make the rate higher or lower is the quality of construction. So in other words, if you have a home that's a custom built home with higher quality building materials, it's going to cost more for the insurance, as opposed to a house that is very simple and made with, built with lower end quality construction material. It's going to be less to insure. So typically when you buy homeowners insurance, you're not paying insurance on the land. So if you have a house that's in a newer, say a more expensive part of town, you may be paying a lot for where it is as opposed to the type of construction that it is. So typically you don't pay insurance. You don't pay insurance for the land because the land's not really covered. It's the house that's built on it. So what determines the rate is what type of construction. And also another thing that determines the rate is where your house is in relation to the fire protection. So that's not a big issue here in Houston, but if you're in a rural area, I used to be a State Farm agent in a little town called Ridgeway, Pennsylvania, and one of the biggest drivers of the cost was how far away it was from the fire department, because fire is a big exposure for a home. So that's a good question, and there's lots more involved, but pretty much that's it. The house, the square footage is a big determinant. What kind of foundation, what kind of construction, and that's what determines the cost or the rate for the insurance on a home. So medical payments to other, I'm just going to skip that for now. I want you to read about it though, because it's a very, very important coverage, as well as bodily injury. So now I'm going to jump into an assignment. This is an assignment. Erica Neal did this for me. She did great work. So Erica, if you happen to be watching on Facebook, hi, I hope you're doing great. I think she gave me permission to use this. I'm sure she did. So this is your homework assignment. Okay, this is a student who already did it. So today in our Zoom meeting, I'm basically doing the assignment review along with the lesson in insurance. So we're going to talk about auto insurance, and you're going to learn about auto insurance this week and the next week. So the way you're going to learn about car insurance, I think the best way to learn about car insurance is to get a quote. So if you've already got a car and you've already got insurance, this is going to be a super easy assignment for you. If you don't have a car, but you have a driver's license and you're going to one day get a car, this is going to be a great, helpful assignment for you too. Now, if you happen to be someone who doesn't have a license, maybe you're an international student and you can't even get a license here, whatever your situation is, that would be a little more challenging. So you may need to work with someone who, you created a pretend car in your financial plan. Now you're going to have to create a pretend insurance policy. So, you may need to be creative to do this if you're an international student or you don't have car insurance now. So I'm going to focus the how-to for you students who are currently driving a car and you probably already have insurance, hopefully, because if not, that's illegal to drive without insurance. So I know that's not going to fit all of you, but I'm going to set the table with that in mind, with that basic idea that you're driving and you already have insurance. And the rest of you are going to have to do a little extra work, maybe a little creativity to do this assignment. But if you are currently driving and you already have insurance, let me give you the easiest way to do this assignment to save yourself some time and to learn as much as possible. So I told you I was a State Farm agent for many years, and State Farm's the largest insurer of automobiles in the country, so maybe you're with State Farm. If you are, that's great. You're just going to call your State Farm agent. You're probably going to speak to someone other than your agent. Maybe in my office it was Sheila. Hi Sheila, if you're watching. So you'll get Sheila on the phone and you'll say, Sheila, I want to do a quote, a car insurance quote. And so let's just assume that you're going to get a quote on the actual car that you pretended to buy in your financial plan. That would be perfect. So you would tell Sheila, here's the car, don't have the VIN number, because you don't have to tell her that it's for a homework assignment, but if you're friends with Sheila, you'd certainly want to say, Sheila, I'm doing this for a homework assignment, and I just need to learn how these coverages work, and I need to get an actual quote. And Sheila would be happy to do that for you, because she's a super nice lady, very helpful. So I think that's what Erica did. She went to her insurance company, and she got a quote. Now, here's the thing. As we go through this quote, you're going to see there are lots and lots of different coverages. And I want you to understand these coverages and kind of how they work. So having a conversation with an insurance professional who is creating a quote for you is a great way for you to learn which coverages are best for you. So take advantage of your insurance agent if you have one. This is a great opportunity for them to do a little education for you. This is something I did all the time as a State Farm agent. I was always thrilled and thankful to help teach someone how their insurance package worked. And I especially paid attention to young drivers because here's the thing. If you don't know this, your premium as a young driver is very, very high. Did you know that? So I'm going to ask you a question. If you're a guy or a girl, which one do you think is going to pay higher premiums for car insurance? Guys or girls? Why do you say that, Alina? Alina said the guy. And it's true. It's absolutely true. But why? because they're reckless drivers. Olivia, do you think that's kind of like, well, stereotypical. Guys are reckless okay, that's true, but still, anyone else? Guys are reckless drivers. Come on, some guys, you got to stick up for yourselves here. But some guy, tell me what you think, because so far I'm only getting responses from the ladies in the group, it looks like. So somebody, what do you think, guys? Do we deserve to pay higher insurance premiums than girls, than ladies? Okay, I'll give you a minute. I think we have some really shy guys. So too shy to put something in the chat box. I'm taking notes too, by the way, because you do get points for class participation, and this is that. Yes, probably. That's pretty vague, Ashton. Be a little bit more specific. Yes, probably. You think guys deserve to pay higher premiums than girls? Yes, probably. Be a little more specific. Yes, probably. Why? I'll give you a second there, Ashton. You got yourself out there on the branch now. Because in one of the articles I read, the studies show that guys are more careless drivers after they have insurance and they drive more recklessly. Okay, that was Alina. That's good. Nicholas says it's guys because I think statistically they were into more accidents. Yeah, they get in more accidents because of a certain thing called, it's a 5-letter word. It starts with S and ends with D. They plan everything last minute, Olivia says, and leave late all the time, so they have to rush and drive fast. LOL. Thank you very much for the LOL. Charlotte says, I think so. Guys are more reckless at driving. Chris, you're right. No, because not all guys are reckless drivers. That's true. But still, statistically, which is how insurance works, statistically speaking, of course, guys are more reckless. Because if a guy car about their cars, I guess that's care, Chris. If a guy cares, thank you very much, cares about their cars, they would take care of it. So that's your reason for saying guys shouldn't pay more in their insurance, I guess. So let's talk about cars for a minute. Which kind of car do you think guys want to drive versus girls for the most part? Maybe you guys are different, but when I was growing up, back in the 60s and 70s, they had these things called muscle cars, which are awesome. They were designed to go fast, and guys like to go fast. Yes, Olivia, muscle cars, trucks, sport coupes, etc. Yeah, I think that's right. So I don't know about you. Maybe the times they're changing, but typically guys like adventure, they're more risk takers, they drive faster. That's just been one of the things that's been consistent throughout history of cars. And so insurance is higher. So let's talk about the coverages. I thought that was going to be fun. I hope it was fun for you. Guys pay more. So here we go. This is the first coverage. It's, remember, the auto and the homeowner's policy broken into two sections. Section 1 is the car. Section 2 is liability. So this is bodily injury. It's actually Section 2, but it's Part 1 of the homeowner's policy. So we've got these three numbers here. We've got 100, 300, and 50. Does anybody know what those numbers are? You're going to know by the end of the week because it's on the quiz, and it's something you need to know. So bodily injury is 100, 300. And if you were doing this quote online, the cool thing is you could click on that little info button right there, and you could get an explanation of what that coverage was. In fact, I think Erica gave us an explanation later on in her article, which is what you'll be able to do. I'm going to scroll down and see if we have an explanation. Okay, no, we've got some we'll get to this in a second. But so back to the bodily injury. There are three numbers there. I want to see if you know right now what those three numbers are. Three numbers. Any of you have insurance? Any of you ever pay your own insurance? Now would be a great time to show off everything you know about insurance. Surely somebody on this Zoom call is actually paying for your own insurance, and if you are, this would be a good time to chime in. Olivia, sadly, does that mean sadly you're paying your own insurance? If you are, then it would be even worse, even more sad if you didn't have a clue what you were paying for. So if you are, if sadly means, Olivia, that you're sadly paying for your insurance, then I need a little more than that, just sadly. So somebody, surely, there's somebody on this call who's paying for your own insurance. Okay, so Olivia, what do you think these numbers mean? These three numbers. You've got, in this case, 100, 350. That's liability coverage. Do you know what that means? Do you know what your coverage is on your policy? I'm not going to ask you to tell me who you're with, but I could tell you this. If I opened my 300 is the cap? No, it's not the cap. Well, it is the cap. Obviously, the cap is 300. Yeah, it is the cap. But 100 is the cap too, and 300 is the cap, and 50,000 is the cap. They're just three different caps. So I'll tell you what they are in a minute. But if I were to open my, I have Progressive insurance right now, and if I were to open my insurance app, Progressive, let me see if I can do that. I think I can. If I open my, it's going to have to re-download the app, and I'm on airplane mode, so that's not going to work. But depending on who your insurance is with, you should have, if you're, who are you with, Olivia? Tell me who your insurance is with, since you pay for it. Okay, Geico. Do you know if they have an app? Do they have a mobile app? I'm sure they do. Do you have the app? Do you have the app handy? Yeah? Can you open it? Can you open it? On it? Sweet. Okay, that's awesome. Now, if we could only share your screen, that would be even super cooler than, you know, me sitting here talking about it. That would be a great, like, Zoom call. So Olivia's going to open her Geico app, and she's going to look at her coverages, and then maybe she and I can continue this conversation about these coverages. 100, 350, I'm curious what Olivia has, and she may not want to share that. It's up to her. It's up to you, Olivia. But I'll tell you, the 100, 350, these are important coverages. It's all on one line. It's called bodily injury, property damage. So the way that works is the first 100,000 is the maximum that the insurance company is going to pay for any one bodily injury claim. For one person, the maximum that they'll pay in this case is $100,000. However, if you get in an accident, and this is your policy, and the accident is your fault, and let's say you get in an accident with someone driving a minivan, and let's assume there are 6 people in the minivan, and they all go to the hospital. The most your insurance, okay, you can share, Olivia, so share what your coverages are, and I'll tell you how your policy would work before I get into this one. Oh, you mean you can share your screen? I don't think that's going to work because I'm using some crazy technology. Can you just tell me, can you type in what your coverage is for liability, bodily injury, and property damage? It should be right there on your declaration page, hopefully. While you do that, if you're talking, Olivia, I'm not hearing you. Let me check my preferences and make sure. Oh, I know why. Because, you know what, Alina, you were talking earlier, and I didn't have my settings right, so I couldn't hear you. Okay, Olivia, I can hear you now. Sorry. What were you saying? Give me. Okay, cool. Alina, I could tell you were trying to talk to me earlier, and I couldn't hear you because I had my Mac setting. I didn't have this connected to my Mac, even though it's connected to Zoom. Sorry about that. Technology. So while you're looking for that, Olivia, let me just tell you how this coverage will work. Thanks, Alina. So 100, 350 in this case. You get in an accident, it's your fault, somebody goes to the hospital, they could even die. Your policy is going to pay up to $100,000 for one person's injuries. And those injuries could be the loss of a limb, the loss of an eye, it could be loss of income. So 100,000 is the most that they would pay for one person. But the next number, the larger number, that's called the aggregate. And that's the amount that your policy would pay for multiple people who were injured in an accident that's your fault. So in that case, if you had 6 people in a minivan and they all went to the hospital, your policy would never pay more than 100,000 for any one person, but it wouldn't pay more than 300,000 for everyone. So let's say that all 6 people went to the hospital and they were even, everybody had $50,000 worth of medical bills. The policy would pay for all their medical bills because each of them were under 100,000 and 6 of them together combined equaled 300,000. So that's how that would work. Now let's say that out of those 6 people, one of them had to have brain surgery and it cost $120,000, and the rest of them just had minor injuries. The one person with the $120,000 loss would only receive $100,000, even though your policy never paid out the full 300,000. So does that make sense? That's how those numbers work. It's important, and it's on the quiz, I do believe. So you have 30,000, 60,000 for bodily injury, Olivia. So in your case, in your policy, if you got in an accident with someone who was in the hospital and they had a $50,000 medical bill, your policy would only pay 30,000. In which case, and this is important, if that happened, if we got in an accident and I'm driving down the road with Caleb and Maddie, my grandkids, in the back, and you rear-ended us, and one of them went to the hospital or even died, how much would your policy pay? It would pay $30,000. So if they went to the hospital and they had a $50,000 bill, here's the question. Who would pay the extra $20,000? And that's really what this, it's me. So that's why I want you to understand these coverages, because today, Olivia, it's possible that you don't have sufficient assets so that if I had to sue you to get the money, if you don't have any money, it doesn't really make sense for me or my insurance company to sue you, right? Because you don't have any money. So keeping low insurance is probably a good idea because it's cheaper for you, right? That's what you think. That's what makes sense. And this is really the point of this part of the lesson. I need you to really think about this for a second, because in oh, I'm sorry, what did you say? I missed that. I heard something, but I didn't catch it, Olivia. You forgot you weren't muted. Okay. Oh, you didn't want to say anything. Got it. Okay. So the thing is, who's going to pay? Who's going to pay the difference between the $30,000 that your policy is going to pay and the $50,000 that my grandson needed because of the surgery that he had to have because of the accident that was your fault? You have low coverage because it's cheap, but here's the thing you need to understand is that you would end up having your income garnished for the rest of your life. So that's how it would work. Instead of you having, since you don't have the money, you're not going to, you may not have the money if I sued you to pay today, but you have income, future income. So how would that be? How would that feel? How would that seem to you if you had insurance, but your insurance really didn't protect you sufficiently for that accident where somebody got hurt and went to the hospital? It's a really important question for you to think of, because not only do you have to be thinking about 10, 20 years down the road when you do have assets. So if the tables were turned and we got in an accident that was my fault and I had low coverage, but the cost of the medical bills were high, you could sue me, and I have money in my checking account I'd have to pay. I mean, it would be a no-brainer. And I basically would be retaining the risk myself instead of transferring the risk. Because I had low coverages, I would be retaining the risk in order to save a few bucks on my insurance, right? Or I could pay a little more for insurance and transfer more of the risk to the insurance company. So these coverages are really important. And when you get your quote this week, I want you to just think through each of the coverages and understand what it is you're getting in this quote. So the first one you're going to do is the liability, bodily injury, and property damage. So before we move on, let me just say that $50,000 number, that PD, that's for property damage. And the property damage is, let's say I'm driving my 2008 Lexus and we get in an accident and it's your fault. And my car gets totaled in the accident. Again, it's your fault. How much will this policy pay to replace my car? If it's got a coverage limit of $50,000 for property damage, how much will the policy pay to replace my car? Dun, dun, dun. Drum roll, please. Let's see, do we have a drum roll? I'm looking for a drum roll while I wait for someone to answer. Let's see. Overlays. I'm playing with my technology here to see if I can find a drum roll. Nobody? You guys are watching Netflix and I'm playing with my technology over here. So what was the question? I forgot. I'm not participating anymore. You're just making me feel bad. I'm glad you put LOL there, Olivia. Yeah, you've done your job. You've done great today, Olivia. You are now off the hook. Everybody else who's watching Netflix needs to come back to the table. I used to have this applauding thing. I can't find it anymore. So 50,000 would be the max. Correct, Nicholas. So what do you think my 2008 Lexus would cost to replace? I'll tell you this, it's not 50 grand. But here's the thing. So in the same accident, let's say it's your fault, Nicholas, and you have $50,000 coverage and my car gets totaled, but not just my car. Let's say that you caused an accident that destroyed my car, but in the same accident there was a dump truck and the dump truck rolled over, and when it rolled over it knocked down a telephone pole, and the telephone pole fell into a business and it disrupted the business and did a lot of damage to the business structure. So that's all property damage, okay? Now I know that's a crazy kind of scenario, I just made it up on the spot, but you can't imagine the types of claims that I've seen as a claims adjuster for many, many years. I've seen lots of claims. I'm like the guy on the Farmers commercial. We know a few things because we've seen a few things. And I'm telling you that the property damage coverage can be a pretty important coverage as well. So if it's an expensive car, school bus, a building, any kind of light poles, those are very expensive. And that all falls under property damage. So when you get your quotes this week, just be thinking, here's what I want you to think. So get the quote for what you have. If you're already driving and you already have insurance, chances are you may have low coverage. So get a quote for the next level up, or maybe 2 levels up, and compare the price. And then think about how you're going to set up your budget as you move forward and you start to become financially responsible and financially independent. Because the big important thing about insurance is it protects your assets. And if you don't have enough insurance, then you could find yourself having a catastrophic loss that really does harm to your financial future. So I just want you to be informed. I want you to be a good consumer. I want you to be able to think through each of these coverages. So that's bodily injury and property damage. And then we have medical payments. That's been declined on this one. I think what Erica did is she said, you know what, I've got good health insurance, so I'm not going to pay extra for medical insurance on my car. Personal injury protection is kind of actually medical payments covers the other person in your car. So personal injury protection would cover you. So just do a little research and understand these coverages. Here's a really important one. Uninsured motorist coverage is kind of expensive, and the reason that it's expensive is because there are a lot of people driving around without insurance. And so it's one of the most consistently used coverages in Houston is uninsured coverage. So you have to decide if you're going to pay the extra money to be protected against all those people that are driving around who don't have insurance. Believe me, there are a lot of folks driving who don't have insurance. So that's an important coverage. So that's just kind of a summary. That's what we're looking for. After that, you're going to, let me scroll down, you're going to do the same thing for homeowner's policy. And then you're going to build a data card. So this is kind of cool. Erica gave, well, I guess her company, which was State Farm, I believe, gave her a comparison for each car. So it gives the coverage and it gives the cost, and that was helpful. And this is where she put the data cards in her financial plan, which is pretty easy to do, but you'll do that with your auto and your home. You'll just add them to your insurance or into your financial plan. And here's where, this is an important part, the summary is where you tell me what you learned. So she tells me what she learned, why she selected which coverages, and that's what I'm looking for. I'm looking for what did you learn, and that's the point of this assignment. So you're going to do that this week, and you're going to just give me some information about what you learned, and then you're going to take a Quizlet. And Quizlet, I don't know if any of you have done Quizlet, it's kind of cool. But that will be in place of your quiz this week. So you'll grab a screenshot of that and put that into your article just like you do every week. Instead of the quiz, you'll take a screenshot of your Quizlet. And there's also a place for you to comment to tell me what you like better, Quizlet or quizzes. So after you take the Quizlet, give me a little feedback and let me know that, how you felt about it. A lot of students like the mix, having both. So I'll be looking forward to your input. So I'm going to ask for questions now, and then I'm going to take a drink of water while I look for some questions, and then we're going to wrap it up unless you have questions. I guess you're good to go, Nicholas. No questions. Olivia, thank you for participating. I appreciate it. I'm going to look through the chat box and see if there are any other comments that I missed, and I'm not seeing any. Okay, let me go back over here and see if I can find a good image to leave us on. This is who you're going to call next. This is your insurance guy. So I'm going to turn you loose. Okay, I see a question. Because of one of our, oh, nope, it's not a question. You're welcome, Charlotte. Have a good week. Oh, and it is spring break. So let's have a moment of silence and think about all the ways you can be safe and have fun. Oh, wait. Yeah, you can be safe and have fun. And I do hope you be safe and have fun. And I would encourage you to get your assignment done by this Friday by 3 o'clock. You'll get the extra points, and you'll be able to not even think about this course anyway. So yeah, Olivia, you're gonna get a quote, but like I showed you, you're not just gonna get a quote, you're gonna try to understand the coverages, and then you're gonna tell me what you learned in the process of getting a quote. So think about the house that you bought and the car that you bought, and how do you want to protect those, and what kind of money are you gonna spend. So you're gonna get a quote from Geico. You don't, let me just point this out. If you go online and just search for auto quotes, you're going to get inundated with emails forever from all these different insurance people. So that's why I say the best way to do this is go to your own company and tell them you want to get a quote for this other vehicle. And you can get it for the vehicle you're driving now if you want. I don't really care. I just want you to get a quote and compare the coverages and learn as much as you can about each of the respective coverages, and then tell me what you learned. That's your assignment. And then you're going to put it in your financial plan. Very simply add the data cards so that your financial plan shows that you have insurance. You're going to take the screenshots and you're going to put that into your article. So hopefully that's helpful. You got it, Olivia. Thanks for the question. And you guys have a great week. I did have a meeting with someone, I want to say Rihanna. At any rate, I don't see if anyone is waiting to meet with me. Now's the time. I will hang around. Otherwise, I will go post the assignment for this coming week, and you can get started on it. So thank you guys for another Zoom meeting. Have a great spring break. I'll see you soon.